Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Let's chat about a couple of aggressive growth stocks now with Bill Wilton, our aggressive growth stock strategist at Zacks.com. Vishay Intertechnology, VSH, the ticker symbol, is one that you would like to chat about here.
Yeah, and what they do, they make certain types of semiconductors for a variety of different uses. They reported their quarterly results on February 8th. They ended up coming in a nickel ahead of expectations with earnings per share at 17 cents, and that was driven by a 6% jump in revenue. So things are going well for them. They mentioned that they were in a very defensive mode last year, as we were battling this recession. But they have a very bullish outlook for 2010. However, they are cautiously optimistic because they did say that should we see any type of downturn returning, that they won't hesitate to revert back to that defensive posture, which is good because they're essentially saying that they think they're at the bottom and coming out, but they're not getting overly aggressive. Anything that might jeopardize the long-term profitability of the company. One of the other things that I like about them, they've got pretty good valuations. They're trading at about 12 times forward earnings, and they are in a very hot sector. The industry is the second best among the Zacks rank for the industries. So you've got a hot company and a hot sector. That's always good. The growth is at a reasonable price with that PEG ratio of about 1.0. Here you can see just how much investors liked that earnings report. Shares started to surge on that, but like I said, despite that increase in share price, they're still trading at a good value due to a lot of good estimate revisions.
And then J. Crew Group, JCG, the ticker symbol, well-known apparel company.
Yeah, and they distribute through, they've got several hundred retail outlets, but they're probably best known for their catalog, and people can also order through the website. They reported quarterly results on March 9th. And they saw a 19% jump in revenues, which was excellent. They're up to just under $5 million in revenues for the quarter. Earnings per share came in at 61 cents, which was 15 cents ahead of expectations. So that's obviously a good sign for them. And this was their sixth consecutive surprise. They've also got very strong fundamentals. They're well ahead of their industry in terms of profit margins, return on equity, and things like that. They also are trading at a pretty decent value here. The growth is at a good price. Like I've said before, that 1.0 is usually the target for reasonably priced growth. So that means the shares are coming at a decent value, and it still has its Zacks #1 rank. The picture's a little bit different for them. This is a classic buy on the rumor, sell on the news, because you can see they traded a little bit off after they reported their quarterly earnings. But given that strong run-up, that's not too big of a surprise. And shares are also showing a lot of stability right here, which means they could be forming a base to continue higher.
Are they strictly confined to the high-end retail space?
J. Crew? That's what their biggest business is, in the high-end retail. And the lines are getting a little bit blurry as far as retailers go, because it used to be high-end, middle-end, and the low-end, and now it's everyone's coming across price points all over the place. Especially when you're in a recession, people are trying to get every pricing point they can. But they are definitely best known for that high-end space, and that's where they really drive a lot of their business from.
Any way to tell how this economy has impacted them as a specialty retailer?
Well, by judging from their revenue stream, they saw that 19% increase. They've done a lot of cost-cutting measures, as everyone else has. A lot of times you're going to see businesses like J. Crew, a very strong retailer, come out better than they were before, because in a recession it forces everyone to trim the fat, get your expenses lower, operate lean and mean. And now that we're starting to see a little bit more spending, they're turning more profit per dollar that they see coming in than they had been before. So these recessions, a lot of times they'll wash out the weak companies and strengthen the stronger ones, like a J. Crew.
Do you own either of these two?
I do not.
There are more Zacks Rank Buy stock pick ideas for you on our homepage at Zacks.com. We put 4 new ones up there for you each business day. With Bill Wilton, I'm Terry Ruffalo.